Well, welcome back to Not Done. I'm Sloan Dean, and it's hard to believe, but we're 2 months into 2026 already. Today's guest is Pat Pacious, CEO of Choice Hotels International, and Pat and I got a chance to sit down together in person at their headquarters in Bethesda just 2 weeks ago. Now, while lifestyle and luxury often get a lot of the attention in the industry, Choice's bread and butter is economy and mid-scale. And if you want to better understand the strategy and staying power behind economy and mid-scale hotels, this is definitely the episode for you. So with that, let's get on with the show. Well, welcome back to another edition of Not Done. I'm Sloan Dean, and today I have Pat Pacious, CEO of Choice Hotels, with me today. And, I think one of the things that's really unique about you is you don't have your traditional hotel CEO background. You were a U.S. Navy veteran for 6 years. You're a former management consultant. I actually am too. And you've been at Choice for 21 years. You actually started in strategy and then worked your way up through the organization. So welcome to the show. Thanks for being here.
Great to be here, Sloan.
Yeah, so you guys have over 7,500 hotels worldwide. I think you're in almost 50 countries, 20 plus brands. What are you seeing today as we move into 2026? What's the landscape?
Yeah, I think there's kind of two things going on. You look at the traditional supply and demand, right? I mean, if you look at the supply side of the house, with the industry in the U.S. in particular has not seen much growth. If I look at the mid-scale category, the growth of that segment over the last 5 years is 0.5%, 0.5%. And that's a function of where construction costs have been. It's a function of where the bid ask has been on pricing. And probably most importantly, it's where, margins for hotel owners have been under pressure, primarily from the cost side of the house. So, we've seen a lot of supply growth, very, very tepid. The one exception, though, has been extended stay, and that's an area that Choice has been a leader in. We got into the segment back in the mid-1990s, bought a brand called WoodSpring back in 2018. That was a real catalyst for growth for us, and we now have about 58,000 rooms here in the U.S. that are extended stay, 550-ish hotels. So that's the one area of bright spot, I would say, on the supply side. When you look at consumer demand, we're setting up for 2026. We just got out of the Alice conference, and STR took their forecast down once again on kind of that, mid-scale consumer. But, when we look at it, we actually are pretty constructive on that because of a couple of things that are happening. One, you've got a pretty significant tax relief that's going to hit consumers really at the beginning of the second quarter here. And if you look at gas prices, people are paying what they were paying 5 years ago at the pump. So those are two trending catalysts. And then you got some pretty interesting one-time events this year with FIFA World Cup. You got the 250th anniversary of the country.
Yep.
You got the Route 66 Centennial, which is pretty big for road trippers, which is a big segment of ours. So that's kind of how I think about, where the industry sits today, what we've come through, but more importantly, where we see the opportunity going forward.
Yeah, so you telling me we're teeing ourselves up for maybe a big summer domestically?
When we look at the lodging demand side of the equation, that consumer always prioritizes travel. It's called discretionary in their budgets, but people take their vacations. The second thing we look at is, do they have a job? And employment's been pretty strong. There's 175 million people in the country who are working. So while the labor force participation rate has come down a little bit because you got a lot of boomers who are retiring, they travel too, by the way. I think that workforce is pretty strong. And that's an area, again, with us at Choice, we've seen a pretty significant uptick in our business travel from small and medium-sized business and also in our group travel as well.
Just had my good friend Ryan Melliker of Lark on. He's one of the pundits, if you will, similar to Smith Travel, et cetera. And we were talking about this K-shaped economy. I think it's a term that's being used quite frequently. If you look at 2025, at least domestically, you have the stock market is ripping, but it's really 10 companies that are driving the S&P. You look at U.S. households, 20% of the households make up the vast majority of spending, and I think it's the top 10%, I may be getting this off by a few factors, own more than 90% of the stocks. So as such, luxury, at least domestically in 2025, was kind of the outperformer. It does seem like we're in a bit of a K-shaped where, there's a disproportionate spread of the top 20% earners. You do have luxury still projected to be the outside performer for the next year or two. And you guys are very concentrated in mid-scale and economy. How are you thinking about that K-shaped dynamic as we go into 26, 27?
Yeah, look, I've always believed, and the history has proven it to be true. It's a cyclical business. When you have limited supply growth for a period of time, owners are eventually going to have pricing power again to start raising their rates. But that consumer is a you can't have a K-shape forever. You just are not going to have a functioning economy if only 20% of the people are doing well and the other 80%
Right.
are continuing to decline. That's why we do look at things like employment. We look at the cost of housing, which is coming down. We look at gas prices, those things that go into the formulation for a family budget to really get a sense of when do we think that consumer is going to come back in a meaningful way. And that's, if I look at the company back at the financial crisis from 2009 to 2010 to 2011, those were pretty flat to negative years from a RevPAR perspective. And then we got, +5, +7. We even had a +12 year one for RevPAR as the economy came back. Same thing was true with COVID. For us, the first segment that usually recovers is the economy segment. We mentioned that on our last earnings call that we are seeing occupancy hold, and that's a really good green shoot from that perspective to see, if occupancy and rate are dropping at the same time, then you haven't hit bottom. When occupancy is holding, you should start to expect to see some rate improvement in the coming quarters. So that's typically how the industry has gone through its various cycles. And we kind of feel that's where we are today. We're in that trough. The good news is you haven't had a lot of supply growth, so it's an opportunity for that demand side to come back and to make top line revenue much more exciting for our owners.
I think if you look at the mid and long term implications of travel, the outlook is very good, both domestically and internationally. I think if you did a 10-year forecast, travel outstrips global GDP expansion. If you look at the United States, you're right, supply growth is very muted compared to historical norms, and you think that would be a big tailwind over the next, at least maybe not the current year, but over the next couple. You mentioned World Cup. It is such a huge event. And I think more games this World Cup than ever before. I think most pundits are projecting it's a 2% lift. When Russia housed the World Cup, they saw a 7% lift. Now it's a smaller market in Russia. How is Choice preparing, and what kind of expectations do you think with World Cup and where your hotels are positioned?
Yeah, so the hotels that are in the direct markets, they've been focused on it for some time from a revenue management perspective to make sure that they're prepared. We also know that travelers who come to those games are going to add on travel at the end of their trip or maybe before the game. So we are looking at demand flows and overflow into other drive-to secondary markets from where the games are themselves. So the focus is on these 11 cities, and we have product in those markets. But I think it's also the expanding effect of those travelers being here and taking the opportunity to explore a little bit more of the country beyond just the game itself.
One of the starts and stops that U.S. hoteliers have had to deal with, and you guys had to live this, is foreign inbound really kind of hit the brakes, if you will. Unfortunately, last year, 2025, it was down 4% for the United States. The inbound international travel, I think, the talk of tariffs, Greenland, all I'm not going to get political, but it definitely had an impact.
Absolutely.
And then we're exporting, the U.S. consumers are going abroad more than ever, which is great for your international hotels. How are you seeing that impact Choice? Do you think this is just the new normal with the current administration?
Well, I think that the long-term trend, and this didn't just start last year, I mean, it's been going on for probably a dozen years where we've been losing share as a country for international travel. So that's been something I know that HLA, U.S. Travel, and the like, all the other groups that we participate with have really been focused on, is to make that travel inbound more frictionless. When you look at the actual countries that are not coming here, obviously Canada is a key driver of international inbound that pulled back significantly. One thing that Choice did last year was, we've been in the Canadian market for about 70 years, and actually the very first hotel that we had in Prince Edward Island still in the system. It's on its third generation of family ownership. That traveler is staying home and traveling more in Canada, and so we, in the middle of last year, bought the other 50% of the Canadian JV we did not own. so that we could really make that a direct franchise market for us. And through the third quarter of last year, that RevPAR was up 7%. So even though the
Wow.
U.S. has been challenged, the Canadians that are staying home are staying in that Choice product. And our Toronto-based team up there has done a great job for the past 70 years, really, of driving that business. But when you step back and look at Choice broadly, international is only about 2% of our business. We're not heavily distributed in the gateway markets that you think of, like New York City and San Francisco, Miami. So we are not as dependent on it. But yeah, it was a pretty significant impact. So even 2%, if you lose half of that, for instance, that's it's a meaningful impact to your business. It's also the reason why we've been really focused on our international business, and our growth there in the last year was really spectacular.
So what are some of the markets that you see that are the biggest opportunities for you guys to continue growing?
We go to market really with one of two models. We have a master franchise agreement in countries like Brazil, countries like Japan, the Nordic countries, just some great partners we've had for decades, really. And then we go with markets where we do direct franchising. And we generally do direct franchising in markets where you have the right regulatory regime in place and where small business people can aggregate capital and buy real estate. So we are very successful in markets like Canada, as I mentioned, Australia, New Zealand, the Caribbean and Latin America. We bought the Radisson business in the Americas from Canada all the way down to Argentina. That's really been a catalyst for growth for us in the CALA region. And then in Europe, our primary focus is France, where we doubled our footprint there last year to 107 hotels. So it's again a very good franchising market, but it's also the number one, along with Spain, number one and number two markets for international inbound travel. And so our brands resonate over there. So that's kind of the key areas of focus for us.
Yeah, I had this debate with a couple of your peers, and I think sometimes as a U.S. consumer, we're very familiar with Choice, we're very familiar with Marriott, we're very familiar with Hilton, but let's be honest, abroad, that's not the case. And you guys have a lot of green fields. I mean, you look at like India, largest population in the world now, China number two, most U.S. brand companies are very low saturation in those markets.
Yeah, and Sloan, those are two markets where in India we used to do direct franchising, and we would hover around like 25 units. A couple of years back, we partnered with a master franchisee there, very successful company, and since then our brands have taken off. So same thing's true in China. We signed an agreement last year with the fourth largest player in China. It's finding the right partner in some of these markets where direct franchising is much more challenging. But it allows you the opportunity to grow your brand presence and to grow the travel options that people in our loyalty program have.
Makes sense. Makes total sense. Speaking of where you do have a pretty sizable position is, business travel, I believe, I took this from some of your stats, is 40% of all Choice stays now and seems to be growing. If you look at Castle Systems data, office utilization, it seems to be kind of stuck. We had a nice recovery, a nice return to office. That seems to have somewhat plateaued, and we're somewhere around 90% of 2019 office corporate transient demand, if you will. It seems like you guys are taking share.
Yeah.
As those numbers, is that kind of the name of the game, that you just want to continue to grow your part of the pie?
Yeah, I think it's a structural change in the workforce. I mean, I think you look at remote work, you look at professional services, you look at these things that are traditional white collar jobs where people would go and stay 2-3 nights in a city. That's not our customer and that's not our product. Our customer is more the traveling nurse, and that traveling nurse has to travel. They can't do these jobs remotely. It's the infrastructure folks, it's transportation, it's logistics, and higher ed, which again, people are traveling to actually teach. So it's people who can't do their job from their laptop. So that's really been our growth. We used to be traditionally more of a 70% leisure, 30% business travel mix. Over the last year and a half, we've really moved that mix to be more of a 60-40. And we do see growth in that, particularly the small, medium-sized businesses. I've read a stat somewhere, about 70% of the people in the country work for a small and medium-sized business, and that's growing. And then you layer in AI on top of it. And if you look at the job sectors that are going to be most challenged with AI, they're more the white-collar travelers. So I'm not surprised that the Castle System data around people going into an office has been flat. But we learned this lesson in COVID. You remember back in COVID when nobody had toilet paper? Well, the folks who were putting the toilet paper on the shelves, they stay in our hotels. So that's what we mean by that transportation and logistics type travel sector. Healthcare jobs in the country continue to explode, just given the aging workforce.
Yeah.
So, looking at the healthcare sector and also traveling nurses, those are the types of folks who want to stay in maybe an extended stay hotel because they're in a market for maybe 3 weeks, 3 months, that type of thing. So we do see the long-term workforce trends favoring our type of business traveler and our type of product that we have. So that's really the strategy behind it, and also the reason why we're seeing those kind of results.
No, I think that's a good call out. When I was running Remington, what we saw is similar to what you were talking about, that, our urban city center that fed off of a Deloitte or a Bain or an IBM or a Google, those accounts were down, 70%.
Yeah.
But then our hotels that had construction, small business, et cetera, were actually up. It really was this bifurcation of corporate demand, if you will. It's almost like the Fortune 500s and all the advisory companies travel less. And like you said, the companies that have to travel, that's core to their business, is up.
Yeah, we traditionally penetrate account. We want both suits and boots, as we call it. So if you're taking Verizon, for instance, you might want their engineers or their executives, but you also want the people that are climbing a pole. So that's the thinking that we've had around the types of accounts we've gone after. You look back to COVID, I think it was April of 2020, where the whole industry occupancy shrank to about 8%. Our occupancy was at 25, 26%. And so we wanted to really understand who is it that's actually traveling right now when everyone's being told, you're risking your life. And it was these kind of travelers. We had a guy who restores antique furniture, for instance. That's his business, but he goes and sells it and services it. So he had to get on the road to go do his job and earn money to put food on his table. So there's a whole significant economy out there. And as I said earlier, I think AI and this build out of all the AI infrastructure is only driving more demand for that type of traveler, both now, but also in the long term.
No, those are good call outs. Now, I know you report earnings in 2 days from now, so we won't talk about Q4 of last year, but Expedia and Booking.com reported a couple of days ago and have very big numbers. I'll quote them here. Expedia posted, now this is just room night growth of 9%, B2B bookings up 24% because they've made huge inroads with business travel, similar to what you're doing. And then Booking.com was even more aggressive. Their room nights were up 13% with gross bookings up 17%. Some huge numbers. It seems like the OTAs continue to take share. I know you guys had a big push for direct bookings. Your loyalty program's over now 70 million members. How is that going for you guys, and how are you seeing the direct conversion that you're trying to drive for your hotels?
Yeah, I think in certain segments of the industry, when you have the type of the position we're in today, I would call it, in the lodging cycle, you have owners who will take top line revenue at any cost. And so I think that's a little bit of probably what was going on in the fourth quarter. People are trying to make their number. And so, I do think you generally see that. We saw it during COVID. We saw it during the global financial crisis. We saw it right after 9/11 when the OTAs were just in their infancy. They tend to gain share when hotel owners have distressed inventory or what they view as distressed inventory. So I'm not surprised if that's kind of the story that was happening in the U.S. But your point is well taken, that a lot of their growth has also been outside of the U.S. and through penetration with independent hotels who don't have the kind of direct booking access or the loyalty program or the revenue management capabilities that you get when you're part of a chain like Choice Hotels.
Yeah, I want to come back to that when we get to AI and technology. I want to maybe move into your strategy as a company. First, you guys have made a big bet in extended stay. And extended stay, really, the last 5 or 6 years has been the darling, has been a big outperformer. You mentioned Everhome Suites has taken off for you guys. I'm very familiar with Woodspring Suites, which you guys bought, because actually one of your large franchisee development partners is Noble Investment Group, and I used to work for Miss. Crenshaw. What is the strategy? How do you define it in extended stay and with these brands? And what are you guys focused on specifically in that segment?
For us, we kind of identified the supply and demand imbalance that was there. Back in 2018, we bought Woodspring. The purpose-built supply in the industry was only half of what the demand was. So you had a lot of people staying in transient hotels for a month where they didn't have a kitchenette, they didn't have a separate living area. And so that trend of kind of demand being double what the purpose-built supply was told us, okay, there's a big opportunity here. When you look at the operating model, you run a Woodspring Suites with 5 to 7 FTEs, and that's a function of, weekly housekeeping, not nightly or every other day. And then,
I think I read there are some that have gross profit margins in the high 50s.
Oh yeah, and we have more that are even higher than that.
Wow.
So that's been the attractiveness from a developer perspective,
right?
But it's also attractive from a supply and demand perspective, and so that's kind of the insight that we saw. But to do it with a model that really focused on keeping owner cost low, and then as ESOC, extended stay occupancy, needs to be high. So for a Woodspring, we aim for that to be 80% of the house. And so, if you keep that model at that 80-20 rule, you're going to run a profitable box. If you start slipping down where you're 60-40, that's not where you want to be. And the Woodspring owners know it. The Suburban Studios owners know it. Mainstay and Everhome know it. Now, as we move into the mid-scale segment where Everhome is, that ESOC comes down a little bit. You do want some transient in the house as well. It's a really great operating model from that perspective, but getting it right requires the right management company and the right owner who understands how to balance the ESOC versus the transient business in the hotel. For us is we've had the right type of owners, and it's attracted new owners who are traditionally not in that segment. You mentioned Noble, Concord, some others who've come in. It's kind of fun to sit down with them in our onboarding and say, you got to unlearn everything you know in the transient business. Your demand drivers are very different. And at first they're a little resistant, and then they come back to you like 3-6 months later, and you go, oh, you're absolutely right. I need to start counting cars again, like they did in the 70s, as far as understanding what my demand patterns are. So it's a very interesting segment from that perspective, but very profitable.
One of my first revenue management jobs, this was 20 years ago, I had a portfolio of Candlewood Suites that were owned by HPT. They used to absolutely print money. And like you said, when I would do visits, it was definitely, hey, looking at our parking lot versus some of the competitors. And that segment, you're right, underserved, and you saw a need and are filling it. How many Woodspring Suites are you guys up to? Because I would say, I live in Texas, and I feel like every time I drive down the highway, I see a new one under construction. Now, supply is muted, but it doesn't seem like Woodspring Suites growth is muted.
We're pretty close to hitting about 300 units.
Wow.
That's in our projections. But if you look at our current pipeline today, 40% of our pipeline is extended stay hotels. Yeah. So it's become a bigger part of our business. The reason why developers like it is you have a proven prototype, you have a proven operating model, and you have a proven exit. We've had a lot of newcomers come in and buy hotels, and the existing owners who've sold have gotten a great return on their investment.
Yeah, well, the proof is in the numbers. If I rewind the tape 10, 15 years ago, I wouldn't say extended stay was top of mind, at least when I personally thought of Choice. And now you guys are right there in the mix. So kudos to you guys. Do you see you guys growing those brands considerably outside of the U.S. and Canada?
Yeah, we just actually signed an agreement in Australia. I mentioned that's one of our direct franchise markets with to bring the Mainstay Suites brand there.
Interesting.
We're starting out with 7 hotels. It's a big opportunity in a market like Australia. I mentioned Canada. In the joint venture that we bought the other half of, only some of the Choice brands were in that joint venture. About 8 of our 22 were in there. The extended stay brands were not. And so this now allows us to go to market with one business model. And we really see an extended stay opportunity in the country of Canada. And so, again, that's another international market for us that will likely enter here.
And I think last year was a record international year for you guys.
Yeah.
You grew 13%, is that right?
Yeah.
Do you see more of the same?
Yeah, it's a function of what we've done. We've really changed the model. I mentioned, we used to do master franchise and direct franchising, and MFAs were more 80% of our footprint and 20% was direct franchising. Today, 40% is direct franchising. And so when you think about the choice value proposition where we can bring the whole benefit of our loyalty program and our revenue management systems and all these things, plus our franchise development capabilities, it really brings the sort of whole suite of opportunity together. And so that's really what we see by going into these markets in more of a direct franchise model for the future. A lot of what we saw last year from a unit growth perspective was a result of having just a more robust development profile in these markets. We don't try to sell it here from the U.S. We have, in-country teams that are focused on that market segment, understand the owners better, what drives a buying decision, that type of thing. We do expect to see that kind of performance moving forward as well.
How many years has it been since you guys bought Radisson?
Closed in 2022.
Okay.
And then remarkably, that was August. And then in 11 months, we had the loyalty program, the website, the res system, all integrated. So we really started to bring our value proposition to the Radisson brands in the middle of 2023.
Now, this is my own perspective because I've stayed in Radisson's. When you stay in a Radisson, at least internationally, some incredible assets. And then domestically, some great assets, but some that really needed some renovation. How have you worked through that, and how is that iconic historical brand playing out for you guys in the Choice portfolio?
Yeah, so when we bought it, it was it's upscale full service, which is a challenged segment. And a lot of the product that was in that brand needed to be exited from the brand to make a true recovery. So we spent the last 2 years really kind of cleaning up that brand. We've already kind of released the numbers we did at Alice on our development for Radisson, but we had a very good development year last year for Radisson as owners start to see the direction of the brand and where we're taking it. It's a great conversion brand opportunity for the right owner. And so our development team has started to have some success where we are kind of bending that curve from a growth perspective.
I'd be remiss if while we're talking about strategy, we don't talk about partnerships. And you guys have been in partnership, I think, with Preferred for quite some time. And I think your members get access to some of their hotels. How is that going, and how do you see that partnership evolving?
So it's really moved into a kind of second phase of its maturation, if you will. We had a partnership with them for many years that was kind of really hard for the consumer to figure out, how do I use my points from Choice Hotels in a Preferred hotel? We've made that sort of consumer-facing aspect much easier to do, and last year was really the first full year we got a chance to see the performance of that, and it's gone quite well for them and for us. We're interested in kind of deepening that relationship with them and have been in discussions to do so. So Preferred is a great example. That's not a segment that we have a brand in, that is that kind of luxury. So it gave us an opportunity to offer that to our Choice Privileges members. We did an additional partnership with Westgate Resorts last year, really at the tail end of 24, but it sort of came to life during 2025. We've had a long-standing relationship with Blue Green Resorts. So our partnerships around product, if you will, other types of lodging accommodations have really been successful for us, and we hope to do more on that front as well as we move into the future.
And then you have your co-branded credit cards. I believe you have a new co-branded MasterCard. Is that right?
Yeah.
And these have been huge money makers for credit card companies and the brands themselves. I think Marriott got a lot of attention on their Q4 earnings with their announcement. I think the stock was up 7 or 8% on the day. I probably got that wrong, but it was big news. For those listening in, how you guys are thinking about the credit card partnership, because the way I look at it is you're in the loyalty business, they are too. And it's kind of this friend foe. How do you see that partnership? Because it has become a huge business. These co-branded credit cards are massive.
Yeah, it's really an opportunity for a brand like ours to engage with our consumer outside of the stay. So get them thinking about the Choice Hotels brands while they're buying gas, while they're buying groceries. We just launched a new loyalty program upgrade on January the 1st with some new capabilities in it. But you can use your credit card spend to gain status in the program. So it really is kind of getting that consumer to think beyond the hotel stay about the value of Choice Hotels and the value of our brand. So that's the underlying strategic benefit for us and for our co-brand partner as well. So it makes sense strategically from a economics perspective, the banks are getting new card signups, so they're getting new accounts, so they're growing their customer base as well. So the benefits are mutually beneficial on both sides for the co-brand provider and also for Choice Hotels.
You've substantially grown your loyalty base, over 70 million members now. Some of your competitors are in the 200 million plus range. And we're also seeing hotel brands now extend themselves into other categories of, whether it's a partnership in vacation planning or experiences or it's yachting. How are you thinking about like partnerships beyond just credit card, beyond just Preferred? Are we going to see Choice boats at some point?
It's interesting because I had responsibility for this really all going back to 2005. So a lot of these ideas that companies are partnering with today, we've thought about it over the years.
Yeah.
For us, it really has to fit into the right value prop for our consumer. So they have to think about us in that same vein around, is Choice Hotels the right person or right company to kind of recommend some other product for me? And that's where the relationship with timeshare made sense. The relationship with Preferred made sense. And so as you get further and further away to kind of ask yourself, does the consumer still view us as the enabler of that? So that's the first thing that we kind of think through. The second is the business scalable? It costs money to provide that inbound traveler to that other product. And you want to make sure, first of all, you're not siphoning off your own consumer that would stay in your own products. The cost of, providing the guest into let's say a trailer park or a campground or a marina or some of these other things that have been bandied about really has to make sense from that perspective. And then, as in any business transaction, is there enough of the transaction cost to go around to benefit everybody? And so those are the things that we've looked at over the years. And, every time you add a new product, you got to market it. So that potentially siphons off your consumer marketing messages. And that's something else we're very mindful of, is that we don't get too far afield of who they think Choice Hotels is. And also, can we provide that inbound traffic that's going to make that partnership work?
Yeah, no, well said. Well said. It's interesting with all the hotel brands that are now available and now all the adjacencies. I find myself as a hotel geek having a hard time keeping up. So I can only imagine what the typical consumer is feeling. As you kind of look out, it does seem like there is this race of scale. Everyone wants their loyalty program to be bigger, that scale matters in today's world more than ever, and that partnerships play a big part of that. How are you thinking about scale and then maybe merger and acquisitions? You've done a bunch.
Yeah, I think first of all, you have to have a certain amount of scale to be relevant today. I mean, I think if you look at the standalone brands of the prior decade, most of them have been bought or been absorbed up into larger chains. And that's really a function of what matters for owners. You've got to be able to deliver that customer at scale. You've got to be able to deliver the cost structure of a res delivery system at scale. So it's tougher to do if you've got a standalone brand or if you don't have thousands of hotels. Look at our platform today. We have 7,500 hotels in a certain number of countries outside of the U.S. as well. But inside the U.S., we have a very strong presence in that upper midscale world. So our focus has been, let's push into extended stay. We saw a big opportunity there. We see significant runway. Let's push into upscale with the Radisson acquisition or the growth of our Cambria brand and our soft brand, the Ascend collection. You look to grow scale in segments of the market where you don't have it today. So that's been primarily our strategy, and it's also driven the M&A that we've done over the past 10 years or so.
Yeah. How do you maybe give a little more? You acquired Radisson, Wood Springs, now ownership of Choice Hotels Canada. What is the framework when you're evaluating a deal? How are you looking at it to make these decisions of, okay, do I buy or do I go try to grow something organically?
So it's really it's two litmus tests. The first is, can I improve the owner's ROI at the hotel level, right? So if I think I can lower their costs and lift their top line revenue, the owners are going to want more of what I'm bringing them. And then the second is, can I scale it? And that's the benefit our shareholders get. So, just buying a platform and having it sit at the same number of units tells me I may not be providing the right value prop to attract more owners, and my shareholders aren't going to be happy if I buy something and it doesn't grow. So that's really been the litmus test for us. It's been wildly successful for both Woodspring brands as well as the Radisson brands, and that's really our. We've only owned the other half of Canada now for 6 months, but we're done with the integration work. So now we can bring that value proposition in full force into Canada.
Brian Chesky at Airbnb has made several comments about them moving heavy into hotels. They have subsequently built out a hotel team separate from Hotel Tonight that reports up to their real estate team, and are now going to independent hotels and offering them 12, 13% take rate deals for early sign up. How do you see them? They've been really short-term rental, and is that shadow supply and alternative accommodation. They really haven't come into the sphere of all of a sudden now are they another distribution competitor. Do you have an opinion on that?
Yeah, we don't focus much on them primarily because they've been more destination and urban oriented and 7-night leisure stay oriented. And so that's not the Choice Hotels footprint, and it's not our traveler is 1.5 nights. And so from a standpoint of them competing with us for consumers or for supply, it really hasn't been an area that we've said, okay, that's a new entrant into the market here. I'm not surprised that that's where Airbnb is going. I think as you kind of get to the scale they've gotten, you got to feed the beast with more supply, more opportunity for consumers. So it makes sense that that's an area that they would move towards. And they've got a great brand with great, eyeballs coming to it. So providing a new product category makes sense. We'll see how successful they are. Amazon got into the business. If you remember with that, they've did.
Yeah, I remember.
They've done some of these things. So it's really a question of if they see it's a really attractive business and they fund it. Will it become something that's a real critical player in the industry? We'll see.
Yeah, it definitely feels to me that the risks are for market share dilution over a period of time from Expedia or Booking.com, right? Like, did they just become another option? And then if you're an independent hotel where distribution is getting harder, you probably don't have AI experts. And what is that going to do to distribution on your team? I can see a lot of independent hotels looking at that as, okay, let me get myself one more shelf. Whether or not that's good, bad, or indifferent, I won't pretend to know the answer, but it definitely seems like those are the two things that happen. If I transition this to, that's kind of a lead into everybody's favorite topic today, AI. How are you thinking about AI? And I'll leave that open-ended for you because you come from a tech background. You were in tech, you were in strategy at Choice before rising to the level of CEOs. How are you seeing AI and maybe its impact on Choice?
We cut it into 3 layers. The first is customer acquisition. Okay. Certainly, when you look at it, doesn't matter what category you're in, lodging, retail, you name it. Search traffic direct to websites is down from the search engines. The consumer is doing their shopping and their exploring in the answer engine world, the zero-click world, as they call it. So it is changing the patterns of how consumers are shopping. I was here when the OTAs were coming into the thick of the distribution environment. That was very disruptive, and people had to change the way they were doing things, and you had to start spending money on search terms as the meta search engines got going. So we're in that type of beginning early stages here of change in the distribution landscape. So that's the first layer. The second layer for us is our franchisee value proposition. When we look at the tools, we've been using machine learning for 10 years. That's kind of the earlier version of what today is now generative AI. But whether it's responding to RFPs, whether it's looking at your pricing, there's a number of enormous benefits that we see in our tools that we provide to our franchisees. And we talk a lot about it as being tools that tell you what happened yesterday, becoming teammates that tell you what to do today and tomorrow. And so that's the way we think about it from the standpoint of how AI will impact our owners that buy our brands. And then the third layer is our people. The productivity gains that we're seeing. We have we have about 600 folks out in Scottsdale, Arizona, in our tech organization, and our software engineers with 9 years of experience are performing at the same level as our software engineers with 2 years of experience. So people are getting up the learning curve and the productivity curve so much faster because of these tools, and we're seeing it across the enterprise, whether it's in legal, finance, franchise sales. I mean, it's across the board how it's improving the productivity of our people. So that's kind of how we think about it. I think to me, because people ask, is it a benefit? Is it a threat? It's primarily a benefit for the way I see things, because I think it's going to help our small business owners really compete in a more equitable fashion to their larger box competitors. I think all of the brands are playing with the large language model guys, OpenAI, and now Google and Anthropic and all the rest. So it's kind of an exciting time for somebody like me who's got a bit of a tech background to kind of see where this is all going to play out. I think at the end of the day, it's a net benefit for our industry.
Yeah, it's both exciting and a bit scary all at once. You brought up two things I want to hone in on. First, like distribution. I think it was 70 or 80% up until like 3 or 4 years ago of all travel, at least domestically, started with a search. It's how people think about where they're going to go or to stay, and obviously Google AdWords benefited more than anyone. Booking.com's was their number one competitor for 10 straight plus years. That's changing. Ad business has now seen some declines and some weakness. I've asked this question to most everyone that's been on. You have obviously the LLMs themselves. You then have the OTAs. You then have the brands. You have the hotel owners. Who wins in this game?
Well, at the end of the day, I look at our North Star. I think every company needs to ask themselves, what are you trying to protect or what are you trying to grow? And that should help inform how you want to play with the answer engines in order to drive towards that North Star. And I look back when, in 2005, when the OTAs were kind of becoming much more important and the search engines were becoming much more important. Choice Hotels has always looked out for our owners' ROI. And so as a result, we didn't do last room availability. We didn't give that away. Rate parity for us was a must-have in all of our agreements, and so that was a counter strategy to what a lot of other hotel companies did in that first 5 years, and then they were all trying to claw it back with book direct strategies 4 or 5 years later. So I think if you stick to what's your reason for being and what do you provide your customer and understand what that North Star is, then you can say to yourselves, okay, do I need to keep control of that data or can I give it to an answer engine? These are the decisions that I think companies are going to have to make. But if each one of those is informed by what are you trying to achieve, and just getting more heads and beds, if it's going to compress margins because the cost of customer acquisition goes through the roof, that's not what you want to be doing, right? So I think it's it's really kind of making sure that stays at the center of all the various things that you're doing. And as we're testing and learning with a lot of the large language model providers, that is front and center for us as far as what they can do for us. But most importantly, what can we do for that, Comfort Inn owner to make sure that they're showing up on the answer engine, they're showing up in the right way to be on the shelf when that consumer is now searching or beginning their search in a very different place than what they might have been doing several years ago.
Yeah, no, that's really well said. I am hopeful that also it will make the ecosystem more sustainable, and most notably that it'll give some margin back to some of the owners who have been really pinched these last several years. I do want to hit on leadership really quickly and then close us out. You have a very unique background. You're in the Navy, you worked in management consulting, you now have been at Choice for over 2 decades. How has each chapter shaped your leadership style? And then you've been a very successful public CEO. There's a lot of people who aspire to reach this level, right? Maybe also frame it in a way of, we have a lot of GMs listening in. What are the things they should focus on if they aspire to be Choice CEO one day?
I think the first chapter in the Navy was an operating job. I was put on a ship with 18 sailors who were my age or older, and they were all electricians. I had never taken an electrical engineering course in my life, but I went to school for 5 weeks. So the Navy kind of positions you with enough to be dangerous, and it's important for you to recognize that you don't know everything, but most importantly, you're not expected to know everything. And so I learned very early on to identify who the networked people were on the ship, but also the folks I needed to help me be successful in my job. And if you're a GM at a hotel, that's the case. If it's your F&B manager, your engineer, whoever it is, they've been doing that a lot longer than you may have, depending on what discipline you came up in. So really in the Navy, it was doing that. And then it's about setting the expectation. So, I learned something early on called, you got to learn to, you get what you inspect, not what you expect. You can't just give people a bunch of orders and go sit in your office and expect stuff to happen. They want to see you, as we say in the Navy, on the deck plates. They want to see you down there. And you learn so much more if you're out and about. about in the hotel, or in my case, out and about across our portfolio of hotels or countries that we operate in. Yeah, I'd say the second chapter, management consulting, that is an opportunity where you really get to understand strategically how do you help companies grow. That's usually what you're brought in to do. And in every case, the number one bullet I would put in the recommendation is communication is not what it needs to be. And I wish communication was more better here at Choice Hotels. You can always communicate more effectively. And so that really, your words matter in how you say things. And sometimes you ask people to go do something and they'll say, yes, sir, and they'll walk out the door, and then they have no idea what you just asked them to do. So checking back in with people, making sure that communication, that was probably my biggest leadership lesson from the management consulting world. And then, here at Choice Hotels, this is a company that relies on its franchisees and the importance of franchisee relations, listening to them. A lot of our great ideas, if I think about the soft brand concept in this industry, Choice Hotels was a pioneer in that. And we got that idea by talking to our franchisees who said, hey, I got this independent boutique hotel. It doesn't fit into one of your brands, but I'd really love to have your loyalty program, your distribution, revenue management, all that. And we're like, let's unbundle the value prop and create something called a soft brand. But that idea came from listening to our owners, and that's been true across our portfolio the whole part of my career. I'd say, how do you get to be a CEO? The classic thing of kind of right place, right time is always true, but you have to always think about yourself as how do I take my boss's job? And what I mean by that is not push him or her out of the way, but take things off their plate.
Don't push them in front of the car in the parking
lot. Yeah,
garage.
Exactly. but how do you take things off their plate where they realize eventually, oh, you're actually doing 30% of this job, right. So you're ready to be promoted. And I always tell people who want to be promoted, who's your successor? Because one of the key things, job of a leader is to train the next set of leaders. And so if you're not cultivating leadership at the folks below you, one, you're holding yourself back, but two, you're not really providing them why they come to work every day. And we do our surveys every year about why do you work at Choice Hotels, and 80% of it is they come to work for their manager. They like the company, but you can get that everywhere, but you can see when exits are occurring in a particular part of an organization, it's usually due to a bad manager.
That's right.
And so just making sure that your people understand that, and making sure they understand that, hey, when that elevator door opens in the morning, it's like a curtain that's opening, and you're on stage as a boss, and people are watching what you say, what your actions are, how you treat people. So it's an important thing, I think, as a leader. And in hospitality, as you know, Sloan, this is a great industry. Like, it's funny when we hire people from financial services or the insurance industry, and they work in the hotel business for a while. They're like, why is everybody so friendly?
Yeah.
And it's called hospitality, right? Yeah. So that's the other aspect of why I love this job, and I think those of us who get to participate in it every day really are fortunate.
Yeah, it is the people, and we can't forget that we're in the business of where other people go vacation, and I think you're right, and that the people quit their boss is so true.
Yeah.
I've seen that at so many levels. I agree 1,000% with that. We've come to the time of the show where we like to close out with a few quick rapid fire, no right or wrong. Best career advice you've ever gotten?
You're never going to get an engraved invitation to speak up in a meeting.
So speak up.
Yep. I'm an introvert by background, and
I'm surprised by that.
Exactly.
Wow.
Like a board member said to me a dozen years ago, Pat, you're probably the most knowledgeable person on that subject, but you're not going to get an engraved invitation to speak up. And that has stuck with me. When people ask me my favorite book, there's a book called Quiet. It's about introverts and the impact they've had on the world. Rosa Parks, Mother Teresa, go down the list. These were all introverts who had a major impact on the world. So if that's your natural tendency, it's a great book to read about kind of how to lean the other way a little bit. But yeah, that's probably the best advice I've gotten.
That's great advice. Favorite Choice hotel you've ever stayed at? And sorry if I get you in trouble with some of your franchisees.
Yeah, there's a Comfort Suites that we have down in Paradise Island, right next to Atlantis. Bill Naughton runs it. The reason it's my favorite hotel is my family and I have been down there a number of times. My kids are moving into their 20s now, but we had a lot of great family memories down there at that property.
Okay, favorite non-Choice hotel?
Do I have to ask that one?
You can say an independent hotel. That's what I would always do,
Yeah,
you know.
yeah, yeah. There's a bed and breakfast I stay in the town we used to vacation in a lot. So it's up in Massachusetts. So that would probably be the one.
Biggest misconception about the hotel industry.
More and more, it's a misperception that the kind of innkeeper mentality has been lost. When I look at our hotels that do the best, it's the service quality. We have 40-year-old Quality Inns that get 9 out of 10 guest ratings, and it's because the people inside the hotel are welcoming. And I think that sometimes the impression gets set that, it's just a transaction, and it's not. It's a welcoming experience.
I love that. The last one, if you weren't running Choice Hotels, what would you be doing?
I would be an admiral in the United States Navy.
Very cool.
When I went for my flight physical, this was 1986, and Top Gun had just come out.
Oh, yes.
And so there was not 10 people in line. There were like 10,000 people in line. So getting a flight slot in those days was pretty difficult. So I missed my opportunity to be a naval aviator. Everybody wanted to be Tom Cruise.
Pat, we close out every show with the guest saying what they're not done with. So Pat Pacious, thanks for being on today. What are you not done with?
I'm not done with learning. You mentioned AI, you mentioned some of the headwinds that we have as an industry, and we always learn more when we're in the most difficult times. I mentioned that soft brand concept that came out during the great, recession. Like, you always learn things when you're kind of, up against tough times, and whether it was the pandemic, global financial crisis, today's environment, I'm not done learning and figuring new ways to make the business grow.
Well, thanks for sharing today.
Thanks, Sloan.